Hello and welcome everyone to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, April 11th, 2025. Ron Quaranta here with my dear friends and co-hosts David Brill and Joshua Klayman, back from travels, I suspect. Before we start again, welcome everyone. Thank you so much for joining us on LinkedIn Live, on Twitter, on YouTube. Everything we're discussing obviously isn't any kind of accounting, investment, legal, or tax advice, and what David, Josh, and I discuss really are our own opinions, not necessarily the opinions of our respective firms. Josh, I'm going to put an Apple AirTag on you. You are very hard to track down, and I know you're super busy. How have you been?
I've been doing well, thanks. I was so sorry to miss our last session, but I know you're in good hands with Michelle.
Michelle is brilliant. I hope she's watching. We'll have to have her back as well. David, Josh, let's kick it off. It's been another not boring week. David, if I could start with markets. Every morning you and I wake up, you've probably got your trader turret and all the red and green, and I'm looking at financial news and I see the futures falling out of the bed almost every single morning. When you look at the data, David, CPI is down, PPI is down. You'd expect there to be some good kind of, well, you know, this is great for the markets. And every single day the markets fall out of the bed, or at least can't sustain their gains. David, what's happening in the marketplace?
Well, it's really interesting because a lot of the data points and the inflation numbers are very favorable. Like they're going down. But you know, with all the uncertainty right now regarding the tariffs, the market hates uncertainty, and you're seeing these wild swings, and different announcements move the market significantly. And I think while we have this uncertainty, it makes consumers uncomfortable.
Yeah.
And you see this discomfort when you get a consumer sentiment number that was very low.
Yeah.
And like you said to me on our pre-call, we haven't seen that number since 1981.
Yeah.
So what I would say is, structurally, we have this massive debt and we need to deal with it. And so right now we're going through some of the growing pains of trying to deal with that debt. And so we want inflation to go down. We want the 10-year to go down. Inflation's going down, but the 10-year is going up. And it's very, it's very complex. But at a high level, like in the moment, it's been good news. On a macro level, the uncertainty is really roiling the markets. But the last thing is, I droned on too long, but the last thing I will say is that the crypto market has stayed very steady, and I think that's a really good sign for our industry.
David, it brings me to the next point, absolutely, and I wanted to ask you about this. When I look at the tape, and I look at BTC holding above 77, holding above 80, and we see everything else sort of falling out of the bed. Is this part of the market work to weed out, quote unquote, the junk? And I don't want to use that term lightly, but this to me is a falling out of the crypto market where the quality stays. The stuff that shouldn't be, or maybe is a little too speculative, is getting washed out. Is that, David, an accurate perspective, do you think?
I see it a little differently, Ron. I think I think you have these macro issues hitting our industry, and it doesn't really reflect on specific. It's not like there's a tariff on certain tokens and not on others.
Right.
So I really think of it as a more macro play, and people who own Bitcoin, whether it be in a multi-asset fund or just holding it, they don't see a need to like loosen their positions, and they don't need the liquidity to sell it. They're holding on. And I think with the altcoins, I think we just need more liquidity in the market. So I think they're selling off consistent with other risk assets.
David, when you talk about the macro stuff, I do want to have a credit and kind of liquidity conversation. I think that's a bit more wonkish. But Josh, for the Klayman family office aside, what are your thoughts on the marketplace?
So I actually had a question for you guys.
Sure.
Because I know you guys are way more have way more in-depth knowledge about this stuff than I do. So I've seen references to perhaps there being a basis trade unwind. I've done some Googling about what that meant. But I was wondering if you guys could explain that. I mean, what I've found, it says the basis is the difference in price between the treasury security and a treasury future. with similar characteristics. But I'm wondering, if you don't mind, if you could explain that, and also what that means potentially for the markets.
Yeah,
and
David,
what's happening?
Go ahead.
Too ambitious.
No, in general, particularly sophisticated investors and institutions, Josh, to your point and what you looked up, will buy, let's call it particular treasuries and the offsetting futures. And there's a differential that they generally make between the two. And I think at its peak, David, correct me if I'm wrong, it was an easy 2% month over month return on some of these larger trades. When you look at the challenges in the marketplace and what we call credit compression and the movements in the 2-year and the 10-year, that margin, that basis trade goes away. And when that basis trade begins to go away, some of these are longer contracts. Again, David, correct me if I'm wrong, 2 month, 3 month, 5 month, 1 year beyond. When that trade unwinds and interest rates are going against them, they have to unwind the positions and oftentimes do it at a loss. And that just ripples through the market. And arguably, David, fixed income markets are, I won't say calm, certainly calmer than the crypto markets or the equity markets. Not so much lately. And Dave and Josh, to your point, that's put these institutions kind of on their back foot as far as this basis trade. But David, please add to that.
No, I think what I would say is that I don't think the reactions that we've had have been so much towards the stock market, but it's been when the bond market has moved dramatically. That's when we've seen reactions. And so, I took some notes, and the 10 years moved from 3.8 to 4.6 in a really short period of time, I think since February. And that is like a warning sign about the economy and just sort of treasuries. And I think that's what sort of elicited different reactions we've seen in the middle of the week.
And Josh, just to build on that a little bit, because you opened this Pandora's box of wonk. So I'm going to go down this road.
I love learning from you guys.
David, an 80 basis point move in the 10-year is a not insignificant thing. And one of the things I texted you about this the other night, we never got a chance to talk about it. When you see those challenging moves in the treasury markets and fixed income, it begins to suck out liquidity. Yeah. And that's one of the things that concerns me. Now, arguably for those who are even wonkier than we are, I think there was a 2-year, 10-year auction, David, for U.S. treasuries. And the predictions were, oh my God, this is terrible. And, global geopolitical chaos means no one will be buying the treasuries. I think they were good sales. So I'm slightly less worried about the liquidity in the marketplace, David. But it just shows you the interconnectivity of all markets. Am I correct? Or do you disagree, David?
No, I mean, clearly they're connected. But I really think that's interesting is that the bond market moves are what has elicited responses more than the big moves in the stock market.
Yeah.
And so I think that's something really to pay attention to. And I think also the other thing is that, we have all this debt we want to refinance, and we want to refinance it as cheaply as possible. So that's another dynamic to this. So What I would say, though, bringing it back to crypto, is that crypto has stayed fairly stable during all of this. I mean, we touched 78 and it bounced back. But I think that's really good for Bitcoin and the crypto market.
Yeah. Josh, go ahead. I'm sorry.
Can I just ask another question of you guys?
Of course.
Sorry, I'm becoming the questioner for a moment. But when we think about these tariffs that are going on, that have been announced, right, and we see this dance with China, in particular, usually when I think when we think of items that would be subject to a tariff, they might be cars or something like tangible. Mm-hmm. Do you guys see an effect on, and apologies if this is like a really basic question, but do you see, given the global nature of our crypto markets, do you see this having an effect on relationships with digital assets and platforms and other players that are based in China?
David, you can go first on that one.
It wouldn't surprise me if we saw some loosening of the reins on crypto and while this was going on. But, it's really hard to tell from here. I think people on the ground in China and maybe in Hong Kong might have a better feel. But it would be a good time if they wanted to.
Uh-oh.
That being said,
David, are you using Starlink?
Did you say we heard you say it wouldn't be a bad time to, and then we couldn't.
Oh, you lost
And then
me.
you
Okay. It wouldn't be a bad time for them to reconsider loosening up the reins on crypto, but I think we have to see how everything plays out.
David, I thought you added Starlink to the yacht. I'm a little concerned that it's winking out on you. Josh, if I could just add to that, when you look at things like tariffs outside of the kind of geopolitical and markets turbulence it creates, I think one of the more direct impacts, and I'd love someone in the audience to tell me if they agree or disagree. When you look at things like mining and the chips related to some of this stuff, I think that's more directly impactful outside of the turbulence in the marketplace. But I think it's a good point. It'll be interesting to see where all of that goes.
Yeah, I think the other thing you're going to see is that you've seen some IPOs pulled.
Yeah.
While I think structurally things needed to change, and I think we'll see that change, I think that it has put a little bit of a pause in the market with regards to maybe potential VCs raising money, potential M&A, maybe on the smaller side. But I do think that the train has left the station for crypto, but this may just sort of slow things down a little bit.
Josh, I wanted to bring it back to you with one more question for you, actually, because we've been talking about market turbulence, and I know you and David, since the beginning of the year, we've been talking about the fact that it's just been really busy, like lots of new business coming your way across an entire spectrum of participants in the marketplace. Has the turbulence in the marketplace stemmed the tide of that at all?
I mean, I haven't seen that happening. I've been, obviously, like everyone else, I've heard about, the pullbacks on certain IPOs, but we've also seen some announcements even just in the past week. I mean, and some, like even last week with all of the things that were going on, I think on Friday it was that Galaxy Digital announced that it was going to be going public in the US. They're already obviously public in Canada, but we're still seeing announcements like that. And I think, I haven't seen an impact, at least not yet, on projects.
And I think, Ron, really, I think we cannot underestimate the regulatory green light that the industry is seeing and working towards resolving, really undoing what's been done in the last 4 years. Yeah. So even if the markets are a little turbulent, like the regulatory side is so bullish right now. We wound certain, got rid of SAB 121, the DeFi broker rule, stablecoin legislation is really progressing in Congress. We've had hearings on the market structure bill. Really, I think you couldn't really get much more of a bullish scenario right now as far as regulatory concerns for our industry has in the US.
David, I'm with you. And Josh, just to pull you into this, is the thing that the three of us watch at least as much as the markets is what's happening in the regulatory and legislative space. And Josh, I wanted to run something by you. And I was really struck by this, and I'm sure they'd been working on it for some time, but SEC Corp Fin had recently publicized that and I'm paraphrasing, Josh, please correct me if I'm wrong, stablecoins are not securities, and that they proposed or offered some advice on crypto guidance, crypto disclosure guidance in that regard. Josh, how important is that?
Well, I think it's very important. I think some things, when we, for example, the stablecoin guidance for a second, I think generally, when advising clients, I think it's not like there was at least to me, I didn't feel surprised by this. Same thing with the mining guidance that was given. Same thing with the meme coin guidance that was given. It isn't something that I think is a surprise. It's more a confirmation, right? Confirmation that you're thinking about things in the right way. Because up until now, there really hasn't been that kind of confirmation, even if we go all the way back to the Dow report, right, in 2017.
Yeah.
It told us that certain offers and sales of tokens may involve offers and sales of securities. But what example did they give? A paradigmatic example of a security, a virtual venture fund.
Right.
So, and ever since then, we've sort of been on a mission to say, okay, but what is not within that? And when we look at some of the no action letters, which I'm thankful that we have from that, but really, like Was turnkey jets really immediately applicable to what was going on with protocols in the open market? No.
Right.
And so I think these sorts of pronouncements, number one, they emphasize that we still have laws that apply and we still have the Howey test that applies.
Yeah.
But just to sort of reinforce that, yes, and when you apply the Howey test, and I'm not saying that, I mean, obviously there was the April 2019 guidance as well with the framework, but I think this is really, to me, like the first time when we're seeing a series of examples of applications where they say, and this passes. Almost like when you think about with the SEC, when you go online and you see the Q&As, like the telephone Q&As or whatever, like that's kind of how I see this. And as you guys may have seen, I'm sure you saw, I know you saw, just yesterday, the guidance about offers and sales of securities in crypto asset market. Yeah. I mean, I think we're seeing that we have an SEC and a crypto task force and, you know, everyone else, the other staff, who are really focused on making the crypto space, you know, a space that the U.S. can play in compliantly. Right. And also, I'll just do a quick plug. Those watching at home, immediately after our broadcast ends, or at 1 p.m. Eastern, there will be the second roundtable, which is focused on trading. And it's being live streamed from the SEC's website if you aren't able to go down and watch it in person.
I'll be having popcorn and watching it. I just want to do a quick shout out in that regard. The Crypto Task Force meeting, Richard Johnson, CEO of Texture Capital, which is a WSBA member firm, an old friend and colleague in the industry, will be part of the panel. David Josh, he joined us in DC. He's a true thought leader when it comes to exchanges and marketplaces. So looking forward to that. David, I wanted to ask something of you, and I'm kind of ripping up the script to both of you. Recently, the DOJ dismantled its crypto enforcement group. And David, you and I have often spoken about this offline about how media reports on certain things. I don't mean this to be a bashing, quote unquote, mainstream media or anything like that, but that immediately became fodder for, well, you know, I guess everyone's comfortable with crypto theft and all bad actors in the space. That's not true, correct, David?
Yes, that's not true. I think what it is that they are not looking at protocols in terms of not what the protocols themselves are doing, but more they're focusing on the activities that are being done on the protocols, and they're not looking to go after, you know, engineers and founders of these protocols, but they're focusing on the behavior themselves.
Yeah.
And look, I think ultimately that's where we always thought things should be. So I think this dismantling is consistent with the notion that these products themselves are not in some way violative of the law.
Yeah.
People use these products and are violating the law. You know, they would be responsible the same way they use other types of products and be violating the law.
Right.
You know, like if you're money laundering and you use a different means of doing that, you're still money laundering. So I think that's the distinction that I see. And look, we have to remember that, you know, headlines are what they are, narratives are what they are, lots of clickbait and things of that nature. So, and, you know, somebody who doesn't agree with what the DOJ is doing is going to spin it in their own way. So I think, you know, always like kind of we'll look through the noise and just focus on the substance.
And the three of us, you know, all of us within the WSBA, David, have said this repeatedly for years. Fraud is fraud. Bad actors are bad actors. And, you know, law and justice should come for them. Josh, I wanted to pivot a little bit. I know the Gulf Stream probably brought you home a few days ago. I wanted to ask something totally not crypto related, but as Prada's VIP customer, were you surprised that they bought Versace? And do you become a VIP customer for both of those luxury brands? I'm just curious.
I mean, I think, you know, Ron, I usually go along with your sayings, but I think anyone who knows me knows that I am not exactly like a purse carrier. So I'm certainly not a VIP, although I do have a Prada bag.
I knew that because you told us that once.
All right. So I was not following the luxury goods market to know that was going to happen, but yeah, I'll get back to you on the VIP.
Josh, I had a segue. It's been too long. David, Josh, I wanted to also talk a little bit about something. We've been talking about IPOs and kind of really the evolution of the crypto market. I'll do a shout out to David Adlerstein. David, Brill, you and I and David and probably one or two others are working to put together a crypto M&A webinar for the markets that we think is very, very important. And I asked this of both of you. What are you seeing from an M&A trends perspective? And why is that important?
Josh should go first. The fire engines are back. When every time I'm in Manhattan, they're right behind me.
I mean, Josh, again, let me ask you this question. In that context, to the extent you can talk about it, are some of your clients those M&A kind of clients who are like, look, we want to buy XYZ exchange? Or what does that marketplace look like?
So I would say, that marketplace is heating up. I have deals right now that involve crypto M&A. What can I say? Folks are trying to expand their market reach. And a lot of times, to the extent that they may, and this doesn't just apply to folks coming into the US, right? It could be elsewhere in the world. But often, rather than going through the hurdles of finding or growing organically and obtaining all of the required licensing or registrations or other sorts of things, or developing goodwill over time, sometimes they want to be, I don't know if this is the right use of the term fast follower, but that's what I think of, right? Or where, they leapfrog ahead by doing an acquisition of an entity that already has that. So I think that's what we're going to continue to see. Yeah, I mean, I think, I don't want to say the sky is the limit, because I feel like, that sounds like investment advice or something like that. But yeah, I mean, I think we are, notwithstanding the stuff going on in the markets in the past couple of weeks, I think the US is open for business in a way that it wasn't before. And I think we're going to see more and more of it.
David, assuming the ambulance has passed you by, I'd love your thoughts on this.
So I agree with Josh. I think also we need to keep in mind that regardless of price, a lot of these protocols, technologies just evolved over the past few years. So even if their price is retraced, they're more substantive companies now, and they've executed now. So I think there's an opportunity both for TradFi to purchase assets in crypto. I think there's also for well-capitalized crypto companies. You saw Ripple just made an acquisition, Kraken made an acquisition, Coinbase made an acquisition. So I think you see strategic purchases, and then I think you'll see token on token purchases where like consortiums will develop of different tokens and maybe mergers of different tokens as well. So I think the market is ripe for that, and I think once things calm down a little bit, we'll hear more of that and see more of that.
Yeah, and I think just related to that, although it's not necessarily always part of it, but I think what I'm seeing as well is a renewed focus on secured lending. Crypto transactions, I think that's going to be going up, and not just in the abstract. I mean, obviously, generally, not always, but when you have an acquisition, you often have a financing, right? And so understanding the implications if you're taking security, right, in digital assets, depending on the jurisdiction, I think that's something where there's been, as you guys know, I've worked on some things recently with that, but I'm seeing more and more, even from large institutions, really wanting to understand how this works.
Josh, can we dive into that a little more deeply? Because for years, the three of us and so many colleagues have, crypto lending was a thing for a hot minute, a while back, but it had a series of issues in the United States. Were they solely regulatory issues in the US? And how has crypto lending evolved? Because one of the headlines I'm paraphrasing here, I continually see is crypto lending is coming back. This is going to be a huge industry. And that might very well be true, because that makes it part of the broader global financial markets. But what were those challenges, and are they still there?
So some of the challenges were that it was a very immature market with very immature documents.
Right.
And I don't think that this was necessarily I don't think anyone, well, some people were trying to do scams, I'm sure. But I just recall from, just a few years ago, when you would speak with people at various companies and their counsel, and you'd be looking at documents, you may say, wait, what is this? How does this provision work? Or like, why are there no permitted liens? Why is what happens if there's an airdrop or a fork? And people would say, don't worry about that. If something like that ever happened, we would just call the loan, we would avoid it. And as we know from what happened in 2022 and 2023, things didn't necessarily play out as planned. And it came down to what was in the documents. And even if we think back to Celsius for a moment, right? If you look at what the bankruptcy court, I mean, paraphrasing, all caveats apply, right? Looking at the documents and saying, okay, actually, these terms say that these assets can be rehypothecated by Celsius and that they're not actually customer. You know, like I think people, it caused things, it threw things into high relief. And so now as we go through it, not just for crypto lending in the way that it was before, but really even just for loans in general by large players.
Right.
Like if you have an all assets loan and some of your collateral is crypto, you need to understand, well, where is this going to be custodied? How do I make sure that I have a security interest in it and that it's a perfected security interest in it? What about location? All these sorts of things.
David, to Josh's point, that maturity, and again, we've discussed this many times, in that kind of lending space, the maturity of the proper documentation, and arguably, Josh, calling the lawyers early before it starts to get away from them, that's got to make TradFi in the aggregate, David, more comfortable engaging. Or you disagree?
No, I agree. Actually, as both of you know, I spent months and months drafting a crypto lending agreement with, collateral and with covenants, and there really wasn't at that time there wasn't, a document really to start from. We really started from scratch. And, we had a document that we put together that I thought was pretty robust. But there are gaps, not necessarily in the document I drafted, but just in the way you think about how do you take custody of an asset, if there's a default, if there's a margin call and the margin call is not met. Like the mechanics of that are still, I think, being perfected. And so I think that is some of the challenge. So when you think about it with dollars or securities, it's pretty easy. There's a mechanism for it, a well-worn path. But, if you think about it in lending for Bitcoin, who's custodying it? Like what approvals are they going to, who gives the direction that some of the assets should be liquidated? I think in crypto, it's just a lot more difficult. And then who's holding the assets? Like sometimes if you're a borrower, you don't want to not have access to your assets, but then the lender needs access to them in case you default. And it becomes much more complicated in crypto.
For everyone in the audience, I've seen some of David's work, and there are never gaps in the documents that David puts together. Again, everyone, thank you so much for joining us. If you've got questions for Josh or David or I, please certainly put them in the chat. We're happy to address them. There are two other topics, Josh, David, that are, we follow on a regular basis, both in the work lives that you both have, as well as within the WSBA. One of them is real world asset tokenization and the news around some of what we're seeing. And I think it's BlackRock working. David, Josh, correct me if I'm wrong, from a custodial perspective with BNY Mellon, the Brill and the tokenization of all things in the financial market. And I think it was Larry Fink who recently said, look, tokenization is kind of the way of the future. And again, all the caveats apply, as Josh would say. David, how much more important would tokenization be in the scope of TradFi conversations versus crypto?
Look, I think there's an opportunity, and I'm not covering new ground here, to unlock liquidity and assets that haven't been able to unlock that liquidity. I think RWA is more important for institutions and accredited investors. I think there's still a limited opportunity for retail investors to play in that space. So I sort of see it that way. And I don't really I think things will develop, but a lot of it really right now is more institutional driven and accredited investor driven.
Josh, as a family office owner, do you look at tokenization and think I need to participate in some of these things? I know that's probably an inappropriate question for me to ask given the work that you do, but I'm curious about your perspectives.
I think real world tokenization is very exciting. I think it is the future. I think when I think about, let me just back up for a second. When I think about tokenization in general, whether it's of a pencil or whether it's of, share of stock or a bond or whatever it may be. A lot of times I ask myself, is this just the plumbing? Or is it actually and is this redundant? Or is this completely dematerializing what we would have in terms of a paper or electronic contract?
Right.
And I think as we explore real world tokenization and all of these wonderful ways to unlock liquidity, which a lot of platforms around the world are doing, we have to think about, or I think about, opinions, and to the extent that parties may want legal opinions. And I think that's one piece where we have to, at least in my mind, we're still working it out, right? If you get rid of the paper, what does this do to your enforceability opinion? Can you give an enforceability opinion? And I think so. Yes, I'm bullish on tokenization in general. I just think as it relates to some of the common practices that we as lawyers engage in and clients may expect, trying to figure out how to give the kind of comfort. But this isn't just limited to tokenization.
Right.
This comes up in things like if you're trying to give a view on whether an entity has a perfected security interest in some sort of asset, but the asset's held in an omnibus wallet, right? And you need to understand what rights the customer of that custodian has to those assets at that particular time before you know what rights it can grant, right? So it's all these sorts of things. I'm saying this a little bit weirdly, probably because I have specific examples in mind that I've been wrestling with, but I think that that's sort of a next piece that we need to think about is in the context of a deal and the mechanics of a deal.
Yeah.
What kind of opinions can you give? What kind of opinions do you need? Maybe you don't need them.
Right. And it's a complicated arena, Josh, to your point. And we keep hearing tokenization a lot. There's a very different dynamic, David, in tokenizing, call it treasuries, tokenizing a fund, than it is tokenizing mansion number 2 and tokenizing real estate and all of the kind of overhang associated with that. How long is that going to take, David? And I know that's like peering into the crystal ball, but that's going to be a many-decade initiative. Or do you agree with that?
I do. It's going to take some time. For instance, we need stablecoin legislation because stablecoins will be part of that equation. I think we also need the mechanism. Like if you're going to tokenize real estate, like Josh was talking about, somebody's going to have to write an opinion that this real estate can be tokenized, that there are not mortgages on it, that it's allowed to be subdivided this way and sold in tranches instead of tranches in tokens. So there's complications to that. I think the idea that people are going to tokenize their own homes, I think that is still far away or further away. But I think you could see a portfolio of residential real estate, high-rise buildings, and then, something being done in the Caymans, and then selling tokens to individuals to get liquidity, like on a yearly basis for a few years to unlock some of that value. I think those kind of structures you'll see. I don't think on an individual level we'll see it so quickly.
Josh, did you see how elegantly David queued up the next topic, which was stablecoin legislation? That's pro work right there on David's part. So David, when we talk about stablecoin legislation, Josh, the three of us and several of our colleagues in DC, we've commented on Stable Act in the House. There's Genius Act in the Senate. And I'm sure both of you have seen the news. I would want to do a quick shout out to Michelle Gitlitz and Joseph Colo and some of our colleagues in the legal working group who really spearhead and talk about some of the state work. And Michelle has a part of the legal working group where we talk about state legislation. And I think it was, you guys correct me if I'm wrong, Illinois, 2 or 3 states over the past week put forward bills that have been moved into law as legislation at the state level for stablecoins. David, for the audience, why is stablecoin legislation so important? Let's get down to the nuts and bolts of it.
Well, I think it's so important because it's with legislation and with regulated entities being able to use it. First of all, it's a gateway to crypto broadly. So that's one area that we care about. And then secondarily, it really will take out even more friction. just imagine how quickly settlements can be done in stable coins. You don't have to worry about them moving. The ones that are backed by dollars or US treasuries, you can really settle much, much quicker. You can move assets much quicker. We all talk about the examples of wiring money overseas and those kind of things. So I think it just really speeds up commerce. And so, it's important on some levels. And also B2B is another example. You think of the costs of using credit cards. And even if the credit card companies were to use the stablecoin rails, you could really reduce the amount of cost for doing business between businesses and with governments too, for that matter. You can probably settle much faster using stablecoins between parties.
Josh, I'm going to ask something that's going to sound more provocative about this topic than I mean it to be. Are we no longer worried about stablecoin reserves and proving those out?
Are we no longer worried about stablecoin reserves? I mean, I think that the person, it depends on the person. I mean, we just saw this letter from Letitia James in New York to congressional leaders, right? Saying that in her view, I'm paraphrasing here, that stablecoins should be backed 1-to-1 by US dollars or treasuries, and they should be issued by US companies and subject to state and federal regulatory oversight. I mean, basically, obviously, there's a little bit of a history with Tether between Letitia James and Tether anyway. But, this sort of urging that actually we not have non-US issuers of US dollar-backed stablecoins, and that stablecoins should not include backing by, say, Bitcoin or precious metals or other sorts of commercial paper, things like that. I think some people, like Letitia James and others, care very much about the reserves. And I would just say, in general, I think people are still caring about the reserves because even as we talk about, some of the SEC guidance about stablecoins and whether or not they involve transactions and securities, of course, part of that has to do with, with how stable they are, right? And whether there's backing. I do think one other thing that I think is a very interesting question, obviously the current legislation isn't going this far, but it's interesting to think about, is about the possibility of, this is like not a third rail, but it's one of these topics that, obviously has a lot of hot buttons for purposes of the SEC and other things, which is yield bearing stablecoins. What's really interesting in the discussions that I've heard really relates not just to some sort of speculative return that someone could have. Mm-hmm. This idea that if you are the issuer of a stablecoin, you're earning generally interest on the reserves, right? And should holders of the stablecoin be able to take part in that, just since they are the ones who actually are responsible for their having obtained the stablecoin and given the fiat. Yep. So yeah, I don't really have an answer for this, except just I feel like it's one to watch.
Well, David, I think you and I were joking about Josh's point a while back, which was stablecoin issuance is a pretty damn profitable business if you do it right.
Oh, look, absolutely. Look, Tether discloses what it earns, and they've been doing phenomenally well. I don't necessarily agree that a company has to be US based to have stable coins here in the US. But I think that's for Congress to decide. I have an open mind about it because remember, if you exclude certain entities here, other countries can exclude our entities there. And so I think we have to have a macro view about it. I think that, yes, the New York AG has a certain agenda that she brings to the table that is well known. Yep. But I do think it really starts at the federal level. I think that's I think one of the reasons why crypto has struggled a little bit in getting adoption in the US, besides the SEC's view on things, is that we have, not only do you have, you can't really get a federal charter right now for crypto, right. And you have to go through this 50-state process. Yep. And if you look at other countries, it just doesn't work that way. And so we need to find a way to harmonize our, regulatory regime. And I'm hopeful that the stablecoin bill will go a long way to doing that.
Josh, go ahead.
Yeah, I was just going to say, we of course do have state legislation that applies as well in many cases. And even if you have a non-US issuer, I mean, there are arguments that perhaps the Patriot Act would apply to a US dollar denominated stablecoin, right? Or certainly if you implicate the US correspondent banking system, right? Things like that. So I do think that, like, as similar to David, I think we should keep an open mind about these things. I do think that in terms of stablecoin legislation, and what is that saying? Don't let the perfect be the enemy of the good. I do think that, being able to mobilize on legislation would be a good thing.
Yeah, no, I agree with you both. And David, I kind of take that holistic, we should allow overseas companies to do that, for example. But that being said, for someone who's using it, audit transparency about holdings is something that's critical, no matter where an organization like that is domiciled. We're kind of approaching time. David, I want to go back to markets. I know we'll be texting each other between now and next Friday. What do you see for, again, none of this is investment advice. What are the option markets telling you about crypto right now?
I think it's really a macro issue that's driving this, and we discussed that at length. So I think people are just sort of waiting and seeing what's going to happen. But I think every day that crypto and Bitcoin stays in the 80s, and we're not sort of dipping to 74 again, or touching the former all-time high around 67K is a good day. And so my hope is that on a global level that things will settle down both in the treasury market and in the stock market. But for our crypto audience, every day we stay in this range or close to this range, I think just more solidifies the approach that people aren't panic selling crypto, and you're seeing really more long-term holders.
David, between now and the time that things settle down, I just keep remembering, don't try to catch falling knives, which is sort of my perspective on the markets. Josh, what about you? I know you've both been insanely busy. What are your thoughts about the coming week and anything you're looking forward to?
Well, I'm looking forward to, even this afternoon, checking in periodically on the roundtable.
Yep.
And certainly watching it after that. I actually have to look at the calendar to see what's coming up next week. There could be things that are coming up that I'm not aware of. But yeah, I mean, I'm just happy things continue apace, and hopefully things in our broader markets will smooth out a little bit. But what about you, Ron?
Yeah, I can just one thing real quickly for your week next week, Josh. There's a legal working group meeting Monday, and I've got 3 letters for you that you're going to kill me for bringing up on the live stream. UCC. We will definitely.
Yes.
We will definitely be talking about those. So next week, again, is another busy week for all of our colleagues at the WSBA. We're working on the mergers and acquisitions webinar that we've got coming up. David, you'll be happy to hear that we've already locked down our venue for our next annual event. So the work begins in earnest and earlier than I had anticipated, which is all good stuff as well. And the other thing, Josh, is the follow-on to our DC trip, that conversation that so many of us will be working on to really bring that voice of industry to the market. And somewhere in there is a lovely Sauvignon that's waiting for me over the weekend. So all good, all busy. For everyone in the audience who joined us, thank you so much for being here. If you've got questions for David or Josh or I that we couldn't get to, drop us an email, info@wsba.co. David, Josh, you'll probably be getting texts. We'll be doing the text messaging back and forth again all week. We'll be back next week. It's good to see you all. Thank you so much for your time.
Yeah, and a happy Passover, everybody.
Happy